Hello, this is Ikai Leviton doing an S&P 500 E-mini futures technical analysis. And despite the past 3 weeks selling and despite the bearish day yesterday with the Fed comments being hawkish and also the market reacting accordingly, uh, then I am bullish at this point, and I will explain why. And I will be applying some anticipation. I think it's a very interesting spot for early traders that can set closer stops and have much farther, in relative terms, take profit targets. Now, I'm looking at the weekly. And before we had this triangle, when we had this December 12th high, the week of December 12th, then it broke up out, out up, and then basically this is a failed breakout. We also have above the high of 12th of that the same week. So we broke above that, and then it failed. So bulls were trapped, and we declined. We had this 3 bar decline. The week is not over, and we're still on this current weekly candle. But look what it's doing. It pierced the 20 EMA just below it. It also pierced the low of this trap, this bull trap candle. And we might be seeing a very early sign of basically a double busted triangle where it went up, trapped bulls, went down, trapped the bears, and now might maybe going up again. So I'm looking for spots where I like the contrarian bets that provide a very high reward versus risk ratio. It's not up for every trader. Most of the traders actually look for more confirmations, but in my humble opinion, their reward versus risk is not interesting. At least I don't find it interesting enough, and they're actually also, in my opinion, more exposed to various dynamics of the market. The current dynamics of the market is basically that a lot of rallies are being sold and a lot of bearish rallies or drops are being bought. So to bet now on this double busted one and looking also at the early hints is I think is a good bet, at least for me. So, you could also go for something like this at ES is now at 4,017. Also maintaining the 4,000 after it didn't last night. I also took a long at about 39.86, 85, something like that. Uh, and so, yeah, I am speaking with the position, but I'm being honest about what I'm doing and thinking. So it's up to you to consider that. Someone taking a swing trade can put their stop below the EMA, which is currently at 39.95. And that would also, their stop could be at where is it? At 39.77. This is an orientation. And note it would be also below the open of this nice candle, which was also a nice bullish candle. So we're also under that. Okay. Uh, the open there is at 39.87, and we are just under it at was it 77, right? Yeah, 77.25. And now becomes interesting. The reward. First of all, I can be going, for example, there would be some technical line here. When I mean technical line, was what I mean is that traders and algos will be watching this line, and some will be taking profit here. This would be about, depends when we get there. It's probably next week, but it can be about 41.57, and then you can take half off of the long. That's already a 3.8 to 1 reward versus risk, and you're taking about 3.4% on that upside. But more interesting is that because if we do get a double busted pattern, then the next target is this high over here. Okay, and that is the 4327, and that's already a 7.5% up, and already an A over A21. Okay, so we would be having about a 6-to-1 average on our reward versus risk if we take about half off, as I mentioned before in the previous target, and taking another half off at this target potentially if and when it gets there. Those that are more aspiring can also leave even, can take 40% off, and leave another 20% as a runner, because if this is a busted pattern and they're patient, they can also be exceeding this high of mid August 2022. Okay. So, yeah, this is basically you're risking less than 1% to take this possibly very contrarian and interesting bet. Do trade the S&P 500 E-mini futures at your own risk, and do return to Forex Live for some interesting views.